Hello, this is Matt on the Moon Lambo channel, and there's a new blog out written by Ripple. It's part of their Ripple Insight series, and this one's titled, How to Tap Rapid Growth in Asia-Pacific Remittances. Would it be X-Rapid growth they're referencing? Of course, now known as on-demand liquidity. Well, we're going to dig into that. What the hell? Spoiler alert, yes, ultimately it's on-demand liquidity here. But before we go any further, if you would please delicately tap that like button, and if you are a fan of Ripple and XRP and on-demand liquidity, go ahead and do yourself a favor, subscribe to the Moon Lambo channel, because if you do, your life will finally be complete, and every day thereafter will be happiness. Now, I got this piece from XRP Crypto Wolf, so shout out to you, my friend, and thank you very much for sending this to my Twitter inbox here. And it in itself was a retweet of a retweet. So let me start here with what Ripple initially put out here. And it was a link to this piece, which I'm going to run through. And they just had a little quote from it, which reads as follows. In order to effectively tap the APAC market, it's important to have global reach with locally relevant service offerings. Learn more about what it takes to grow and win in this dynamic region. Now, Dilip Rao, who recently retired, he retired right at the end of 2019, but he was with Ripple for years, working overseas. Now, it's overseas. Depends on where you are. Relative to me, it's overseas. I'm in the United States in the Midwest here. So from my perspective, he was working overseas. Anyway, but here's what he retweeted that, and here's what he wrote. A regional interoperability of payments in APAC needs a cross-border real-time liquidity solution. How about that? What could be a liquidity solution? Could it be XRP? Yup. And then he writes, CBDCs, which are central bank digital currencies, will suffer the same fate as fiat currencies, so only a neutral bridge, like XRP, on a licensed/compliant network of financial institutions makes sense. And what Dilip wrote there makes all the sense in the world, because consider that central bank digital currencies, they're backed by fiat currency. So if a fiat currency has any sort of trouble, the central bank digital currency, which is the same thing effectively, is going to suffer as well. And so that's why really, if the only solution that humans have devised for the train wreck that is the world of cross-border payments is to use a digital asset that has an open market value, not backed by anybody, not controlled by anyone power. That's the only thing that can possibly solve this problem. And why? Well, it gets down to the core issue, which is trust. Trust is not needed. I mean, all you have to do is trust in the fact that cryptography works. So anyway, and then XRP Crypto Wolf retweeted that and wrote, this statement is extremely bullish considering that Dilip Rao was Ripple's global head of infrastructure and innovation before he retired. So Dilip definitely knows what he's talking about, since he would talk to many central banks around the world about XRP for this very reason. And I'll tell you what, it's good to hear from Dilip Rao. I didn't know if we'd be hearing too much from him, just given that he's not, he's retired, not working at Ripple anymore. But it was good to see him pop up on Twitter here. So let's go ahead and dive into the piece now. And again, this one's titled, How to Tap Rapid Growth in Asia-Pacific Remittances, and that's APAC for short. The Asia-Pacific region is seeing significant growth in remittances. However, due in part to the current challenges associated with moving money between currencies, this high growth in remittances is juxtaposed against the high average cost of sending money. In order to effectively tap the dynamic regional market that drives a volume of nearly 2 billion remittance transactions per year, it's important to have global reach with locally relevant service offerings. Businesses looking to offer remittance services must meet recipients where they are, whether it's money paid out to a mobile account or paid out to cash on a remote island. Though senders ultimately decide the remittance provider, the choice is highly influenced by what their receiver demands. While rapid speed, high reliability, and low cost are required to remain competitive, it's locally relevant coverage and payout options that differentiate service providers. In the second part of our remittance series, we'll explore what it takes to grow and win in APAC countries, specifically the Philippines, Thailand, and Australia. And I tell you, that's one piece of the puzzle that is a little more complex. You can't just uniformly fix necessarily remittances, once let me word it like this. Once you've already solved the problem of settlement, if local rails are not efficient, there's not some sort of blanket solution for that. But the good news is most of the friction that is being experienced as pertains to global remittances really does have to do with, well, certainly settlement and also that chain of bilateral relationships. The banking relationships, that's what the correspondent banking system is composed of, and you can take all of that out, but still technically there would be, you can have, if you have, again, a poor communication or whatever the setup is for the local rails thereafter, even after XRP is settled, okay, it could still take a little while, but that's not the biggest pain point. So big picture, I don't think that that's something. I still think that pretty much anywhere that XRP is going to be used as a bridge currency, you can still reasonably state that you're going to settle in real time, because XRP, look, you're talking about settling that portion in 3 to 4 seconds typically, right? So anyway, in the Philippines, cash dominates. Even though the country recently launched a low-value instant payment system that permits users to make digital payments to bank accounts, adoption remains stubbornly low, and cash remains as the most critical payout option for remittances. Thus, service providers need to be plugged into the predominant outlets for cash payouts, notably including Cebuana, Luhur, and Palawan. Yeah, I love enunciating, pronouncing foreign names. It's something I'm very good at, as you well know. Similarly, cash transactions still represent a staggering 90% of Thailand's domestic payments value. In contrast to the Philippines, though, the low-value instant payment rail in Thailand has seen much higher penetration. PromptPay, launched in 2017, reached an average of 4.5 million transactions per day in under 2 years and attracted an impressive 49 million registered users. As a result, the volume of digital payments increased by 83% from 2016 to 2018. Now, is it not crystal clear that the direction that we're all heading, just people across the world in general, is it not clear that we're heading in the direction of digital payments? Everything is going to be digital. You're going to see certainly a lot less physical cash moving around this planet. I'm just saying, and a lot less. And tell you what, I'm not complaining, because I don't like paper money, and I don't like metallic currency coins. It's important to factor the enormous impact of PromptPay in Thailand to be successful. Whereas in the Philippines, you can get far with broad cash coverage. In Thailand, PromptPay is needed as table stakes. Offering cash and other wallets in addition to PromptPay can help gain a competitive edge. Conversely, the Australian remittance market is quite different from the Thai and Filipino remittance markets. In particular, Australia is primarily a sending market for remittance, and the demographics of Australian receivers tend to differ from receivers in emerging APAC countries, as they often have high financial inclusion, earn higher incomes, and work as business professionals or students. Now check this out. A whopping 99% of the Australian population is banked. That's kind of impressive. So the best approach in Australia is to focus on bank account access through partners or via the new payments platform, which is NPP. It's important to note that NPP doesn't offer 100% payment coverage yet, as banks continue to expand NPP's integration and utilization capabilities. Since Australia is a mature payments market, instant and transparent payouts with 24/7, 365, which means every second of every day of the year, availability and upfront visibility of fees can provide a best-in-class payment service. Let me hop down a little bit lower here, because I want to get to the part about on-demand liquidity here before wrapping up the video. And so they have this subheading, and I like this. It's titled, "There's a Better Way, On-Demand Liquidity." Until now, remittance providers needed to work with traditional complex payment rails. Today, blockchain and digital asset technologies are changing the status quo. Banks and payment providers are leveraging RippleNet's on-demand liquidity as an alternative to traditional pre-funding. On-demand liquidity uses the digital asset XRP as a real-time liquidity bridge between the sending and receiving currencies. In the span of seconds, customers who use on-demand liquidity are able to free up capital, guaranteeing the most competitive FX rates to their customers and processing global payments at unprecedented speeds. Yeah, no kidding. None of this was technologically possible prior to blockchain technology, prior to digital assets existing. Now, taken together, the benefits of speed and cost enable those leveraging on-demand liquidity to compete more effectively and provide their customers with an easier and more reliable way of sending money home. Now, and that's absolutely true. And so, as this technology continues to be adopted, any corridor where XRP is available to be used as a bridge currency, you're going to have to use it if you want to remain competitive. Because otherwise, you're going to have these layers of human management that are just not necessary, running up the cost. And just thinking about on top, just the cost to tap in to dormant capital in Nostro accounts. Think about it. If you're a bank paying your larger competing banks just to tap into that liquidity, I'm telling you, that practice is going to go the way of the dodo, my favorite avian creature. And so any entity that once again operate in these corridors, you're going to have to adopt this technology, or good luck. Bye, Felicia. That's all I have to say. But that's it for this video. I am not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.